Hello and welcome to the Accredited Investors Only podcast presented by Accredited Life. Thank you so much for joining me today for another amazing podcast. We have a great interview lined up for you today with somebody that's doing really amazing things. So we'll get right to that in a moment. But before we do, I always like to ask, are you living your accredited life? So something I wanted to talk about today was the importance of asking really good questions and not being afraid to ask yourself questions. One of the big things with living the accredited life and the framework that I've created with living the accredited life is really asking yourself tough questions and reflecting on the things in your life in each stage, whether it be your foundation and who you are and where you've come from and what makes you the person you are today, to the vision stage where it's about looking at where you want to be, kind of taking away any and all restrictions that we put on ourselves, mentally and in our own heads over, I can't do this, I can't do that, but letting all that go away and asking yourself honest questions about who you want to be, where you want to go, the life that you want to live next month and 6 months, a year from now, 5 years from now, 10 years from now. And I can go through all the stages with planning and purpose and living as the example, living your life, loving your life, reflection. All of these stages involve questions that you need to ask yourself. I posted earlier on LinkedIn this week. It was about the importance, or maybe it was last week. It was about the importance of asking qualifying questions and things like that. We all do it in our investments. If we're in sales and we're selling something, we should be asking the clients that we work with qualifying questions and things like that. There's such an importance for that, so that I want to remind you quickly that you should be asking qualifying questions when you're investing in your life, and if you're in a sales position or something like that, you raise capital, you have deals and that you're looking to raise capital for or make partnerships with and all, you need to be asking qualifying questions and all. But there's also asking yourself questions, asking yourself the tough questions. So I just want to take a moment to remind you the importance of asking questions and ask you and challenge you to, what are those questions in your life right now that maybe you should be asking yourself, that maybe you've been putting off for whatever reason. Take a little bit of time today and or later today. Sometimes it's good at the end of the day when everyone's gone to bed and you maybe have some time to think, or early in the morning before everybody's gotten up, or on your lunch break or something like that while you're driving in the car, to have that mental conversation with yourself and to think about, what are the questions that I'm not asking myself? How can I challenge myself? And it all starts with asking questions and then giving honest answers. So, all right, we are very happy to have Annie Dickerson on the show today. Annie has an amazing story and is doing some amazing things, so I'm looking forward to getting right into this interview. To give you a little background on Annie, she is an entrepreneur. She's a mom of 2 kids. She's a real estate investor, and she's the founder and chief brand officer of Good Egg Investments. That is an award-winning boutique real estate investment firm. It was named Best Real Estate Syndication Company in North America by Build Magazine, and has been awarded one of the Inc. 5000's fastest growing companies in America. That's awesome. So Good Egg Investments has helped thousands of investors around the country to invest in commercial real estate assets totaling over $1.4 billion. So we're very happy to have Annie Dickerson on the show today. Let's get right into that interview.
You're listening to the Accredited Investors Only podcast, presented by Accredited Life.
All right, Annie, welcome to the show. How you feeling today?
Oh, I'm feeling phenomenal. Thank you for having me, Peter.
Hey, well, it's great for you to be here. I'm really looking forward to this. We were just talking before the show started. What you guys do is right up the alley of our ideal, listener and that kind of thing. So, in your own words, could you explain it to everybody what it is that you do and Good Egg Investments and all?
Sure. Well, in a nutshell, we help people who want to invest in real estate but don't want to be landlords. And so we group them together. Sometimes it's a few dozen, sometimes with hundreds of investors, each investing anywhere from 10K to 50K to sometimes $1 million or more. We group them all together, and now we have a pool of money with which to go buy assets. And so for us at Good Egg, we focus primarily on multifamily, commercial multifamily assets, usually in the neighborhood of 100 to 200 units, or hotels, select service hotels. So think like your Holiday Inn Express, Hampton Inn, Homewood Suites, sort of that tier of hotel.
Gotcha. So, got so many questions there. First and foremost, so I understand what you guys do right now. Are you operators? Are you partnering with operators? What does that look like?
All of the above. So
Um,
we started out, so my business partner, Julie, and I started out very innocently, not even, we were like, real estate, what's this? What's this about? And we had each found real estate through house hacking before we had met each other. And so, we had young kids at the time. And all of a sudden we were like, oh, this real estate thing, this is a great way to build wealth, sort of in the background as you're focused on all the other, the busyness of life. But at a certain point, your kids are starting to get into all sorts of things. She has 3 kids, I have 2 kids. And you don't want to get calls about your tenants and maintenance and repairs and evictions, and you don't want to have to deal with sort of the time commitments of being a landlord. And so she and I both separately found passive investing is a great way to build wealth for our families while not having to do the work of being a landlord. And so when we first got into this, it was really to help other women and moms to come in alongside us to invest in the deals that we were investing in.
Okay.
And so primarily it was these multifamily deals at the time in Texas and the Southeast. And so we would find a great deal and we would say, hey, who else wants to come in with us? And we kind of started out that way. And then along the way, as we started to bring more education to people and teach people, I started out as a 4th grade teacher. So we brought a lot of education and just made the space a little bit more approachable for people. And so as we did that, more and more people came along with us. And so then, in order to give ourselves some more control, because now we were bringing, several $1 million to each deal, we wanted to have some say in how the deals were going. So then we started to take more of an operator standpoint in the deal. So now we're together with our partners, we're operating the deals that we buy.
Got you. Wow. Okay. Very interesting. I think that's probably a story that a lot of investors can relate to, and to some degree, right? Tell me how we were prior to talking. You were telling me about how you went to Penn and you were in the Philadelphia area, which I'm from. So after school, you were teaching, and then so real estate. How did that? You said the house hack was kind of the first thing, or I'm always fascinated to hear people's kind of story about real estate, and how they got into it, right?
Yeah, I had never wanted to get into real estate. I had never wanted to own a business. I was just going to go and climb the corporate ladder, and I was gonna get the corner office. That was my whole dream. And so I went to Penn, I studied psychology, and I thought I thought actually I was going to go into research and become a professor and do that whole academia route. But I stumbled across Teach for America and the big mission of closing at the time it was called the achievement gap, now it's the opportunity gap, for students across the country. And so I thought, okay, maybe I can be a part of this. Something about it called to me. And so I signed up for Teach for America, and right out of college, I taught 4th grade in a high crime, high poverty neighborhood just outside of Washington, D.C. And I taught 4th grade, and it was such an eye-opening experience to be on the front lines, so to speak, with these kids and their families, and really seeing the impact that a strong education could have on the trajectory of a child's life. And from there, I said, okay, I am really interested in education, but I want to have a broader impact. It was always this calling for a greater impact that led me from one role to another. And so then I went from teaching into game design, if you can believe it,
Oh,
because I wanted to make educational games.
yeah. Okay. Oh, okay.
Uh,
Okay. That makes sense.
So, yeah, so I wanted to bring those two together. So I did that for a while, and then I decided I wanted to bring that experience into the world of adult learning through corporate training. So think, when you join a company, right, there's the onboarding training, and then there's the compliance training, all of that. I wanted to make that more fun for people so that they could be better at their jobs and do their jobs better. And so I kind of brought the gamification aspect into that.
Wow.
Now, all along the way, real estate was never on my radar, but it was something, like I said, we did in the background. So my husband and I had bought these duplexes in DC early on in our 20s. And then, I had a realtor early on, and he said these magical words that I'll never forget, because I had not grown up with entrepreneurs or investors around me. So I didn't really think like that, the rich dad, poor dad mindset. I didn't have that growing up. I was just like, work hard, make money, save money, and you retire. That was it. That was my whole plan.
I can relate to that. Yes.
Right. And so this realtor said, these duplexes, you can live in one unit and you rent out the other.
Yeah.
And eventually, if you move out and you rent out both units, you could get that thing to be cash flow positive. And I was like, cash flow positive? I don't know what that is, but that sounds really good.
Yeah.
And so that's really, in the background, that's what we were doing. And then it wasn't until we moved to the Bay Area, and my husband, actually, he decided he was going to get into real estate as a residential agent.
Okay.
So as soon as he did that, I was like, well, all the things I could possibly do, I'm going to cross real estate off my list, because we can't both be in real estate. That would be ridiculous.
Sure.
So I'm like, okay, you do your thing. I'm going to keep doing my thing over here. And a few years in, as he was growing his business, there was an opportunity for me to help with his business.
Okay.
So I kind of reluctantly did it. I was like, okay, I'll do your website, see what I can do here. But in the process, I fell in love with the investing side of things, and not just in the background. It really brought it to the foreground for me. And I said, wow, this is a real opportunity to not only build wealth, but for me to not have to work again. Because if I can just get this number of houses, all cash flowing this amount, I don't have to work again. And so it was the first time the light bulb went off for me. And that's kind of, one thing led to another. And as I got more passionate about investing, that's how Julie and I met. And that's how we started to bring other investors alongside us.
Wow, that's amazing. Yeah, we have a lot more in common there too, because my first property I ever bought was a duplex as well, and it was my kind of a mentor back in those days had told me the same thing. You can live in one of the units, have the other one, helping to pay for the mortgage and that kind of thing, and then when you move out, it's an investment property that is ideally cash flowing above the more expenses, right?
It's like Monopoly.
You can get an FHA loan too. So you could put, when you're younger, you could put a very small amount down. That helps with the entire process as well. So that's an amazing way to get started. Now, when you talk about working with other investors and bringing, your kind of friends and family and others along with you, God, the educational side has had to been very, very helpful, right? Because that's one of those things that, and because I raise a lot of capital, and that's really my main kind of thing over the last 10 years has been raising capital from investors, and then utilizing the strengths of my business partners and things like that, leveraging their strengths in construction and property management and acquisitions, that kind of thing. And the thing with raising capital from investors, especially like high net worth, accredited investors, that kind of thing, education, and for me, luckily, like I grew up, my mom was a teacher, so she taught high school 30 plus years. So it's kind
It's in your blood.
Exactly. It's in my blood a little bit, but it's not necessarily what I want to be doing. But I thought like raising money, like I like, and then just doing deals. Like I love that aspect of the business as well. But it is a necessary evil. You know, some people love it, some people don't. What's your thoughts on it? You've been doing it for so long, and then what any tricks and anything you can share there? And I noticed that it makes sense now, because when I was going through your website, I noticed that it was awesome. It was just it was very educational, and it explained things that I think a lot of people I felt you really met the investors on their level. You know what I mean? Because I feel like a lot of times people just speak way over their heads, you know, and they're in the business
Mhm.
every day, and they forget that this person probably isn't in the business every day. And even for somebody that does make investments and all, I've been blown away by some of the questions I get sometimes. You know what I mean? Where it's just like, you know, people don't know the difference between debt and equity and things like that. So it's just explaining the little things. So talk to me about that, because that's such a powerful skill for
Yeah.
raising money and doing what you're doing today.
Yeah, well, thank you. And I'm glad that our intention of what we put out has landed with you and your experience of going through our website. That's very meaningful because, you know, we really set out, like you said, when we first got into this business, we looked across the landscape and we are like, what do all these terms mean? What's this jargon and and
Yeah.
what are all these pictures of these big
Acronyms
balsa
and all, and
buildings
yeah.
and people in suits? And we were like, where are the families?
Yeah.
And where's the joy in this business? And that's what we really set out to create. The first time that I had an opportunity to raise capital, I turned it down flat out. I was like, oh, that sounds like the worst part of the whole thing. I'd much rather go find the deals. I are happy to underwrite the deals, happy to do the asset management. I do not want to raise capital. That seems so hard.
Mm.
I was like, I don't know the first thing about raising capital. But somebody talked me into it. They said, well, why don't you just give it a try? Just see, go talk to your friends and family, see if they might be interested in something like this. And I said, okay, I'll give it a try, but I really don't think much will come of it. But as soon as I did it, it's exactly like you said. They were asking me questions, and I was like, wait, I know the answer to that question. I can help you. I can tell you what I know about this. And from my vantage point, not from what you would read on a website of
Yeah.
somebody you don't know, or here I am in your home or on the phone with you. I can tell you, I'm like a personalized encyclopedia, and I can tell you what I know
Yeah.
in terms that you might understand. And here's the difference, I think, between well, not just capital raisers who succeed and fail, but businesses that succeed and fail, is that those that succeed, they're not trying to make themselves look smart.
Mm.
They're trying to make the investor or the customer look smart. Because when you can make your investor or your customer feel smart, look smart, they're going to say, oh my gosh, I feel so good when I'm working with you.
Yeah.
I want to put my money with you. I know how this works now. Thank you so much. When think about the opposite, right? When a business is like, I have all the answers, I have all the experience, and I know all these big terms, and I've got these fancy charts, and I'm going to prove to you that I am good at what I do. And then the customer comes and they're like, "But I don't understand these big fancy charts that you have. I don't know what these terms mean."
Yeah.
And I said, well, this must not be for me.
Mm.
I must not be able to do this. You might be really good at what you do, but I can't understand it enough to trust that I'm making the right decision. So I'm going to go over here because maybe I'm more on a beginner level. And that's what you don't want. You want them to feel like, no, we've got a place for you. You can do this, and it's going to be easy for you. We're going to show you how. We're with you every step of the way.
Yeah.
And I think that's the key difference.
Wow, that's amazing. I love what you were saying there about, you know, just the kind of two different companies, that two different mindset, because I've seen that, you know, all across the board for the last, 10 years. Is there's people that they want you to think I'm the smartest person. I mean, my company is the best. And then there's other people that take it from an educational standpoint where, you know, it's like it's not so much just trust me, I can do this. I mean, but it's let me explain to you what I do and see how it fits your goals. There's an old story, I can't remember. I think it was a British prime minister from a little, while back, where this woman met with both, the person that was running and the other person, the two people running, and she left both meetings, and the one, she said, yeah, he made me think that he was the smartest person in England. and the other one made me think that I was the smartest person in England, and that's who ended up winning. I wish I could remember the names and all, but it was just that's one of those stories that has stuck with me, because I think that's very important. Is you want to empower your client, to understand, and I just think that's a better way of doing business. You know what I mean? Is that they understand, so there's no surprises. It's just that they fully understand how it meets their goals and things like that, instead of it just being, this is what's right for you. You know what I mean? And it just kind of dictated to you, that kind of thing. So how do you do that? How do you find investors? How do you work with them? How do you produce like content and things like that? I'm curious to, what you do, how you get from, meeting somebody to them investing with you.
Well, first I'm going to start even before meeting them, because I think there's a lot of work that we do before we ever even come across an investor. Because, there's all sorts of people out there. And we used to, when we first started, we made this rookie mistake of saying, oh, anybody who's got money, come on in, we can help you. And it paints you into a corner, because then as a business, you can't really go have any opinions. You can't make a stand in any direction, because if you're trying to bring everybody in, anything you say is going to offend somebody or not go along with somebody, right? So you end up not being able to say anything at all. And so we learned very early on, before we ever even meet somebody, we got to know if when we meet them, if they're the right person for our business or not. And just like they need to know if we're the right company to help them with their goals. So same, it's a two-way street. So about a year into our business, we created our ideal investor avatar. This is a fictional person. We call her Jen. And we know everything about Jen. We know how old she is. She's perpetually like 38 years old. So she's got 3 kids. She's got a golden doodle. She and her husband, San Francisco, they own a house. They have a couple of rental properties that she doesn't want anymore. We know everything about them, or as much as we can, this fictional person in this fictional family. And what that does for us is then when we go and we think about, okay, well, what is Jen's day like? What does she know about this world that we're trying to bring her into? And what is she scared of? And what is she intimidated by? Okay, well, maybe she's trying to sell off one of her rental properties and she's wanting to do a 1031 exchange, but she doesn't want to be a landlord anymore. Okay, well, let's see if we can help her navigate that. And first of all, help her understand what a 1031 exchange is, help her understand her options, help her understand what a syndication is. And so it helps us to really dial in, out of all the things we could talk about and educate somebody on, what are the key things that are going to move the needle for this person that we're looking for. And because we're able to really dial it in, it helps us to attract the right people.
Yeah.
And so those people, when they come across the content, they're like, oh my gosh, this is exactly what I'm struggling with. Yeah. Or even the way that it's created. For example, like Jen, she doesn't have a whole lot of time. She's got kids, carpools, laundry, all this stuff to do. She doesn't want to sit down and read this lengthy
a 600-word LinkedIn post.
Right? She wants a bite-sized thing. She wants podcasts that she can listen to on the go. And so it just really helps to inform our overall strategy and to give us a personality for the brand, so that by the time we meet with a Jen in real life, she already knows us and we can say, oh, okay, we know exactly where you are. And we've had lots of people just like you come through and invest with us. Here are the main things they struggle with. Here's how we can help you. And so it just creates a much more seamless experience on both ends.
Yeah, no, that's amazing. So when you're producing content, Jen is in mind for that production of content. Now, do you do anything for other people, or I think that's such a hard mindset, right, for people to wrap around. And I've done that too with the investor avatar, because when I think about my investors, they span the spectrum. There's people all over the country, young and old. Some people are working, some people are retired, some people are active investors, some people have never, maybe own their property, but that's it. So is it just you put the blinders on and just focus on Jen, or is that not 80% of the content, 90% of the content? Curious to what that looks like.
I'm so glad you asked this question because everybody always gets tripped up here. They're like, but I don't want to exclude all these
Exactly.
people.
What about Michael?
Right,
Exactly, right?
right. If I focus just on this one person,
Yeah.
think of all the other people I'm turning away.
Yeah.
But here's the thing. I'm 100% sure, Peter, that when you went through our website, there was nowhere on our website that said, you must be a woman.
Sure.
You must be 38 years old. You must have 3 kids. Nowhere does it say that. It never excludes people.
Yeah.
And so people don't know, like our investors, they don't know who our ideal investor avatar is. They just get a sense of it from the content. It really helps inform us when we're creating content in our strategy. But what's funny is, even though our avatar is Jen, half of our investors are male. So we have male and female who come to us. And what I always say is it's not the physical attributes, really. It's more the internal attributes. So Jen, like I mentioned, she, in this fictional world, she owns a couple of rental properties and she's done with that. She's got kids. She doesn't want to deal with that anymore. Well, guess what? Somebody else, let's say John, who is a retiree, and he's got a couple of rental properties, but he wants to travel the world now. He also doesn't want to deal with his rental properties. So same thing, right? Same issue. But unless you define this person and start thinking about what they're going through, you're not even going to think about things like that.
Yeah.
And so that's really what it does. It doesn't exclude people, but it helps you get really concrete and down in the weeds with the person you're trying to attract. And then all the other people, even if they are male, female, young, old, doctor, professor, doesn't matter. Those people who have some of those same attributes are going to come and connect with you.
Yeah, exactly. I mean, that is probably the best explanation I've ever heard of that, because I've seen that so many times. I've seen it in different ways, you know what I mean, for different reasons and things like that, you know, creating your client avatar, that kind of thing. And that's always the thought in the back of the mind is, well, I don't want to turn these people off and that people off. You just put it into such perfect perspective. I mean, that is, I love that. Very inspiring. You got the juices flowing for me now. But exactly, because there's things that Peter or Mike or Sally or Tom, whoever it is, there's things that they can relate to that's important to Jen in their life as well. So, and you'll catch those people. It's not like you said, it's not like you're necessarily excluding anyone through your content or anything like that either. But that just provides such clarity and such focus when you do go to sit down and create content, that kind of thing. That's awesome. I love that. So kind of changing hands, you know, you talked about liking multifamily, you talked about liking hotels. What was it that kind of that led to that? You know, what brought you in? Because it sounded like you started in the house hacking with some duplexes and that kind of stuff. What led you into 100 to 200 unit apartments and then hotels and that kind of thing?
Yeah, well, multifamily for us was a natural progression from duplexes. Even though, you know, you think 100 units, 200 units, that's huge, but it's the same model.
Same, right? Yeah.
So, right? You think about it, right? Like the people we were trying to attract, women, moms, families who had never really invested in these larger commercial assets. If we jumped right away to something more complex, even like self-storage or mobile home parks or preferred equity, and they tried to explain to somebody who's never lived in a mobile home park, who's never had a self-storage unit, how this model works on top of how syndications and passive investing works, they're going to be like, whoa, that's too much. I don't even know the first thing about any of that.
Yeah.
But if we say, hey, have you ever lived in an apartment before? And say, yeah, I've lived in an apartment before, or I've lived in a dorm before. Like, great. You know how every month you pay rent? And they're like, yeah, I remember that. Well, that rent check goes to the owner of the building and they pay the mortgage just like you might pay on your house. They also have expenses and sometimes they're also improving the property. And they're like, oh, yeah, okay, I understand that. Well, how would you like it if instead of being the tenant paying the rent check, you were in the owner's seat? You got a piece of that rent check. And all of a sudden they're like, Oh, yeah, that makes sense.
Yeah.
I can get behind that. It's a very easy on-ramp for people who have never invested in this space
Yeah.
to say, okay, I've had some experience with that. I understand at a high level how that model works. And again, it goes back to that level of comfort and that level of confidence that they have. Because if they can understand it, then they're more likely to invest. And so that's how we kind of started and why we started with multifamily, not only because we saw a huge opportunity with adding value to these multifamily assets, but we saw it as a great opportunity for people to have an easy on-ramp to get in.
Yeah. I like that. It's like you kind of had Jen in mind, and it's in some ways you had the client in mind when it came to, what would kind of be the path of least resistance, knowing the type of investors that you work with. Because and I completely agree with you. I mean, sometimes like I've done commercial brokerage. So like when you're leasing industrial, like you're leasing an industrial park out. I mean, the types of tenants that it could be all kinds of different things, where they're manufacturing things, and like you're listening to what these people do, and it's like mind blowing. This comes from that factory, and we put it together here, and we send it to this other factory. Or it could just be something where it's a plumber, and they're storing parts and things like that. You know what I mean? And everything in between. It's harder, I think, for investors to kind of wrap their mind around if there's a vacancy here. And then too, just in a lot of ways, that market, depending on the demand and where it's at and all, it's like something could be leased out in a week, or it could be a year, and there's not a whole lot you can necessarily do, to really drive that. Same with retail. I think sometimes like the small local, shop, the shopping center, people could understand that probably to some degree. A pizza place, a nail salon, a laundromat, a little restaurant, something like that. But if you're not the kind of person that notices those kinds of things, like when you drive around and you go to places and all, then it's one of those things where it's like you get a vacancy, and it's like, and what's going to be there? They just have no idea, right? But when it comes to residential, and I love this as an owner of single family and multifamily properties and all, it's like you have a pretty good idea who it's going to be. It's the family, your kids. They don't have kids, single person. Like you have a somewhat of an idea, and to the point where it's just like when people come in and they view the place, you probably know who you're going to hear back from and who you don't, right? It's just like because from past experience and that kind of thing. So, completely agree with that. I would think hotels is probably somewhat of the same thing as well. I mean, who the heck hasn't stayed at a hotel before, right? So how the business works. Not a whole lot. You understand the exterior of the business. Now it's just now your job is to kind of explain to them the interior as an owner now, how it works from cash flow and all that kind of stuff. And talk to me about that. Like, so when somebody comes in, how do you do webinars, or like how do you educate the client? Is it just through content and getting them in your kind of environment, your atmosphere, and then you get a drip campaign on emails? Or just curious to how you're educating the client and getting them from first conversation to investing with one of your deals?
Well, I got to say, it's different for everybody. So, different people, different strokes for different folks. Some people, they spend a lot of time concealing all our content before they ever sign up for a phone call with us. So they'll read all of the blog posts, they'll listen to all the podcasts, they'll watch all our videos, and then they'll get on a phone call and they'll say, "You know what? I actually got most of my questions answered. I only have one question specific to my scenario that I wanted to run by you," and then they're ready to go. Those are great. Love those guys. Yeah. Those are because they self-serve.
Yes.
And they see what's out there. They're very resourceful, and they look for what they need, and then they come and they're ready to go. There are also other people who come and they're like, "Oh, my buddy introduced me, and I haven't looked at any of your stuff.
Yeah.
I don't really have a lot of time and or experience with this, but my buddy had a good experience. So could you kind of walk me through it?"
Yeah.
And so then they hop on a call and they don't know a lot. So then we kind of start from the beginning. But either way, because we have a lot of this content already there, when somebody asks a question like, "What is a cap rate?" or "What's an IRR?" or "How do I analyze a deal?" what it does for us, since we have the content out there, we can say, oh, you know what? We have a great blog post on that, or we have a great video that will walk you through that with a real live deal. Would you like to see that? Let me send you that right after this call. And then that saves their time and our time.
Yeah.
And so it's sort of a combination of, we kind of, like we said earlier in the call, we try to meet them where they are.
Yeah.
So we don't assume that everybody's going to need the same things. We put our best foot forward in what we can provide for people. And then some people will just take it exactly as we put it out. And some people will say, you know what, I need a little more support. And then so we're happy to kind of customize the experience however they need.
Yeah, it's nice to have the tools in the tool belt, right? For the different people, depending on where they're at and that kind of things. Because, yeah, there's clients who, like you said, they'll come to you. They've already absorbed a lot, and it could be in a relatively short period of time. I've had people where it's been like, years and years. I mean, I was like, I saw you when you first launched 5 years ago, and you've been in my radar. I watch your emails and things like that. And other people where it's like, oh, so-and-so referred me, or I caught you on a podcast a couple weeks ago. I listened to your webinars. I read this and that, and they're ready to go. But then there's those other people, like you said, maybe they don't have the time. They're not going to sit and listen to something or whatever. So it's nice to be able to have that conversation, on here's what you do and explain it, and then have those things to follow up with. And, if you find the time, here's the kind of things to go through and all that kind of stuff. I think that it makes a lot of sense. And then I feel like too, you have investors. I like to say there's emotional investors and there's logical investors, and everybody's a little bit of both, but typically the scales will tip more to one than the other. You know what I mean? So like your engineers, they tend to be logical. They just want to hear the numbers, right? Yeah. It's like, well, give me the numbers of the deal. What's the IRR? What's coming in, what's going out, that kind of thing. And then the emotional is more, what's the team? Man, I mean, what kind of, tell me about the market, and the supply and the demand and that kind of thing. So I always think it's important that you're balancing both, but you understand who you're talking to at the end of the day, and what side they're kind of leaning towards. And that's why I always think I always tell people, I think it's important that if you're making an investment, that the person you're talking to is asking good questions. I think that's one of the signs that you're working with somebody good. Now it could just be that they're good at bullshitting you, that and they know the right questions to ask. But at the same time, it's like if they're not asking you any questions at all, then they're kind of they're that part. They don't have the gen. They're just taking money from anybody and everybody, that kind of thing. And I think it's important that if they care, they should know what your goals are, right? You know what I mean? And they should, because who knows better than them whether their investment's going to meet your goals, but they need to understand what your goals are, right?
Exactly. And we've turned investors away before. And we've said, you know what? I know you're really wanting to jump into a deal, and I know we have this deal open right now, but based on what you're telling me about your goals, it seems like you need something shorter, or you need something in a different market or a different type of asset. And so we have actually turned investors away because we said, I don't think this is the best fit. I know you're eager, but we want to support you in your goals.
Yeah. No, I think that makes a lot of sense. And that's probably where you said you majored in psychology, or when you were in school, as I'm sure that comes in handy a lot of times when you deal with, yeah, right. I can imagine there was lessons learned there that you're tapping into with some investor calls and things like that. Cause I think that's an issue that I always suggest to investors, that they take the time to understand what it is that they want. Yeah. And then they need to be able to understand what investments will help them to get to that point. When it comes to like opportunistic versus value add versus stabilized, and more, debt offerings versus equity offerings and things like that. Cause it's like, you have some people where it's like, just from what you're saying in the conversation, it seems like you're very risk adverse. It seems like you want something short term. Like it seems like debt would probably be great for you, but then they're talking about like some development, a new industrial, park development or something like that, and it's like, those returns could be astronomically wonderful. They could be great, but you probably won't be able to sleep at night very comfortably, when everything else starts to, maybe, when you start to run into issues and things like that. So I always think it's important with investors that they it starts with them understanding and taking that time. We all do that in our businesses, right? Or we should, where you set goals and, you get everybody on the same page and you understand your values and your mission and all that kind of stuff. And I think it's important that people, investors do that in their personal life when it comes to understanding what their short-term, long-term goals are. And then, kind of navigating the alternative investment space, if that's where they wanted to go down, and what investments are going to help them meet those goals at the end of the day, because it's going to help them to make the right decisions. What were you going to say?
You touch on something really interesting, because personally, my philosophy is that money is just energy. And, people think money says all sorts of things about them. Oh, I didn't do enough, or I don't earn enough, or I don't provide enough value, or I need to do this, X, Y, Z, But really, money at the end of the day is just energy. It comes in, it goes out. But what is so valuable about money is when you get a hiccup about money, when you're like, I don't feel right here, or I feel like I need to invest more, feel like I'm not saving enough, or I have this thing I want to save up for. Great. Then use that. It's almost like a symptom of something bigger, right? That in and of itself may not be the be all and end all, but it's telling you something about your overall situation. And so if you take the time to investigate that and you say, okay, why am I feeling this way about needing to save more, even though I have all this money sitting there in my bank account? Well, what is that really saying? Okay, maybe I shouldn't have that money just sitting there. Maybe it's not about putting more. Maybe it's about, like, I feel like it needs to grow.
Yeah.
Okay, well, how else can I go about that? And so you're right. It's about so much more than money. That what I love about it is it's such a tactile thing that people get hung up on. And so use that, though, lean into that and use that as an opportunity to dig in and see what else is going on below the surface.
Yeah, no, that's makes a whole lot of sense. And what was it? Was it Wharton or was it Harvard? Just recently came out with a study that said, money actually does lead to happiness more so than they thought in the past, right? You know what I mean? Like, so to your point, it's just like it is very important. It's important to take the time. If there's something there, if something's bothering you, if you feel like you need to do this or that and all, it's like that's your body, that's your mind. It's telling you to slow down, maybe, and become more conscious and more aware of the decisions you're making and things like that. And sometimes it doesn't have to be real estate either, you know what I mean? Or you're doing it in the wrong way. Because I've seen that before. Like, I remember when I first started going to RIA meetings, back in the day, I had bought a house within a year, if that. You know what I mean? It was one of those things where it was like, I love this. I had mentors, I had people around me to help me and all, and like this was all exciting to me. And I knew about real estate. My story is a little different than yours in that sense. So it was just like, but I didn't ever look at it that way. I mean, my father was a property manager, so like I looked at it from a totally different standpoint. So it was like once my eyes were open, it was like I'm all in. There's other people where it's like, they've been going for 20 years and they still haven't bought their first property. And it's like, I think you need to examine, maybe do things a little bit differently. And it doesn't mean there's anything wrong with you. Like my brother's a perfect example. He's corporate America. He's everything you thought you were going to be, back in the day. I mean, where he's going to climb the ladder and all that stuff. And that's what he wants. I mean, he has no interest in, dealing with tenants and toilets and that kind of thing. My dad was the same way as a property manager. He'd managed everything from single family to retail to industrial offices, you name it. And he had no interest in picking up single family homes here and there and stuff like that. But there are those other options out there. I mean, there are different ways that you can do things and stuff like that. So it's like that's where you have to know yourself, right? And what's going to work best for you, all that kind of stuff. And speaking of that, it kind of leads to my last question. What do you see the future for Good Egg, and where do you see things going? And do you continue to like multifamily? I know a lot's going on in that space over the last few years with interest rates and things like that. A lot of new supply on the market. But I just saw an article, I haven't had a chance to read it yet, that they're expecting demand to be through the roof in 2025. And it is in residential, obviously, with single family. We're in our markets, at least, we're still seeing rents going up, prices, are going up, and the markets we're in don't have the same supply, additional supply that some of the southern markets have and stuff like that. So I'm curious to what you're seeing and what you kind of see as the future for good egg and that kind of stuff.
Yeah. I think dusting off my crystal ball, I think that in some form or fashion, multifamily will always be core to our business for what I mentioned earlier, because it's such an easy on-ramp.
It's like a gateway drug to
Exactly.
these other investments, right?
Yeah, that's right. That's right. So it's easier for people to get into this space with a multifamily investment. Now, just like you said, we see the same things. The supply and the demand, the markers are looking real good for real estate owners over this next little bit, because, with those higher interest rates over the last couple of years, there haven't been a lot of people building, or they've slowed down drastically. And you can't just, with a 200 unit apartment building, you can't just say, oh, the interest rates are better now, I'm just going to plunk one down right now. It doesn't work like that. It takes at least years or more.
Entitlement process and all that kind of stuff.
And so we already know that, come early 2025 into 2026, there's really not going to be a lot of new supply. So we're faced with what's already been built. And here's the thing is, over this last year, because if you think back 2 years ago, interest rates were lower and there was a lot of activity in developing new multifamily. So those came online within the last year or so.
Yeah.
But even with these sky high new deliveries, those were getting absorbed, meaning people were still filling those new properties up. So there's a lot of demand, and that demand isn't going away. And so, next year, as the new supply drops off, there's going to be more demand for the existing units out there. So we're going to start to see some of that supply and demand in play. As for long term, I think what's interesting is I think a lot of people are waking up to a lot of things. We touched briefly on consciousness and money as energy, and I think more people are waking up, and it used to be things like manifestation were so like, whoa, that's way out there. But people are talking about that in boardrooms now.
Sure.
And right. So a lot of this stuff is coming, like the science behind things like manifestation and a law of attraction are starting to catch up to those things that we weren't able to explain before.
Yeah.
I think there's some really interesting intersections between money and investing and consciousness, human psychology, human development. And so I think there's a lot of that we're on the cusp of seeing come together. So we're really excited about that space, above and beyond just putting your money into a real estate investment and seeing that grow. But holistically, what does that mean for your money picture overall? And where are you going beyond just how much money you have in your bank account, but what are you really here to do? And so that's what we're excited to support people in.
Wow. And I absolutely love that. And what a great way to wrap up the show. But my God, we could have had an entire, we could do a whole series about that. I mean, you are like right on my level. I love that kind of stuff. I mean, my introduction to real estate was, Rich Dad, Poor Dad in one hand, and then Earl Nightingale's, The Secret on the other hand, and You Are What You Think and all that kind of stuff. So to me, the investing world has always been those two things. You know what I mean? And like just so much of that space is you have to have the two of them together in my world. You know what I mean? I just think that they have to be there, because in order to invest on the operation side, as a passive investor too, you got to be able to visualize, you got to be able to think positive thoughts, you got to be able to control the way you approach things, your mindset, all that kind of stuff, or you're gonna have a really hard time. You know what I mean? Because there's gonna be ups and downs and things like that. So if you don't have the right mindset around it, and if you don't have the right way of handling risk and things like that, you're gonna struggle. Or it's gonna limit your ability to earn in a lot of ways and things like that. So wow, I absolutely. You hit the nail on the head there, and it just brings me back to my roots at the end of the day. And a lot of what we're trying to do with this podcast and kind of the community and the experience that we're building behind it. So I absolutely love that. And find now. Do you talk about that in your content and things like that too? Are you finding ways to weave that in, or?
Yeah, we're starting to, and it's
Yeah.
really exciting. We're starting to bring in some of these voices and this information through our podcast to start,
Okay.
and we're starting to bring in some of these stories and modalities. We had somebody on our podcast talk about the Akashic records, which she explains were
Sure.
like a Google search for your soul.
Yeah.
Uh,
Sure.
we're going to have people on talking about something called human design, gene keys, like all these different things that just help you wake up to just different ways to see yourself and understand who you are and what you're here to do. And then bring that into the world of money
Yeah.
and start to see your money through that lens.
Yeah.
And it helps us all to see that we're all connected, and we're all we're all kind of in this thing together.
Yeah.
And it doesn't necessarily, when you put your money in an investment and let's say you lose some money, it doesn't mean anything about you. It might be part of a bigger picture.
Sure.
And if you can surrender to that and you can say, I'm learning something from everything that I'm doing, that's how you're going to make the best return, because you're not going to be scared to take the risk to get into those investments and to learn those lessons, to find those best investments for you. And so we're trying to bring it full circle with all the things that we're learning and we're experiencing out there.
I love that, and I just a thought in mind with dealing with investors, and there's some that have lost money in deals, and the approach that they take and the mindset they take to it versus others who have, I mean, it can be wildly different, and it's just and it can affect everything that you do in a very negative way. Where it makes you scared to do certain things. It makes you not trust people. It makes you not trust the world, and all that kind of stuff. And just it can kill you in a lot of ways, from a mental perspective and physically, right, over time.
Got it.
Yeah.
Those two examples. Well, you have one investor who invests 25,000, loses it. The other investor does the same thing, right?
Yeah.
One investor can say, well, I lost $25,000. This isn't the path for me. I'm never doing this again. I'm only using my savings account. That's the safest thing. The other investor says, well, that 25,000 was tuition. I learned a ton.
Yeah.
I'm sad I lost it. That's a bummer.
Yeah.
But oh my gosh, I know so much more than when I started. And next time I'm going to invest 50,000 because I'm more confident. That 50,000 turns into 100,000, turns into $1 million. And that investor has so much more flexibility and is able to make so much more, because it all comes back to that mindset and that willingness to take chances.
Yeah, exactly. And just sitting down and thinking about what you learned, you know what I mean? Like, and mistakes you've made and all. And I think it's such an important thing for as a business owner. You know what I mean? I had a kind of a mentor a couple years ago who every Friday, we would sit down and it was like, what do I learn this week? I mean, what did I achieve? I mean, what mistakes did I make? What should I tweak? All that kind of stuff. I mean, so I think that's so important. But yeah, not everybody's like that. And really, when you say to yourself, what is the difference? And it's mindset, it's something mental, it's not something physical. But and then just to go back to what you were saying before, where it's like wealth is the same thing. It's interior, it's exterior, it's not only physical, but it's just your overall attitude, and the way you show up in the world and all that kind of stuff as well. So that's amazing. I love that I can have that conversation all day. And how can people learn more about this and listen to your podcast and find out about your offerings and be educated and in your atmosphere?
Thank you. Well, the best place to go is our website. It's goodegginvestments.com, and we'll have a ton of resources for you there. You can find our podcast there as well. It's called The Life and Money Show. But yeah, that's the best place to go, goodegginvestments.com.
Great. Well, Annie, thank you so much for being here. I love this conversation, and I look forward to keeping in touch with you and following you along your journey. And anything I can do to help in any way, I'm here for you.
Fantastic. Thank you so much, Peter. And, I said at the top of the hour, I was feeling phenomenal. I'm feeling even more phenomenal now after this conversation. So thank you so much.
That's awesome. Well, I hope the listeners are as well. So this was a great conversation. Annie, thank you so much for being here. And we look forward to another exciting episode of Accredited Investors Only next week.